All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for another market bias update report for Sunday, June 1st. Before we get into the charts, recapping trading last week, ended up having a pretty shitty week last week. Ended up having five trades, one win, four losses, and three of those losses you can see here ended up being well within my risk tolerance rules, but I had one blowout on me that gapped over my stop loss and actually ended up leading to about twice as big of a loss as I was originally anticipating. So this ended up to a loss of $14,170 for the week. So I am now looking to make some of that back this week. So let's dive in and see what we can do about it. Going out to the charts, starting on SPY, the S&P 500 here, we are just kind of consolidating in a range here above all of our weekly moving averages. If we toss this out to a daily chart, you can see last week here, I called out saying that I think we were going into neutrality and that I was going to be very surprised if we had gone outside of these two yellow lines on the chart. On the top side, looking at about $598, and on the bottom side breaking down below 576. So I was not going to be surprised at all with any price movement as long as it stayed within that range and just kind of chopped back and forth. That is exactly what we ended up getting, and we have not broken out yet or down yet. So on S&P 500, I do not have a very strong bias one way or the other right now. I see more consolidation to come, and I am going to be waiting for price to either break out above that $598 level or below the $576 value level. Going out to Triple Q, basically the exact same thing, looking for price to break out either to the top side above 528 or to the bottom side of 503. Looking at our RSI, we are still overextended and our MACD has signaled across here, which is an early warning sign to sell. So if I had to give the nod, it would be for either neutrality or potentially pulling back and coming down into this 200 period moving average around 495. And we'll be a little bit surprised unless we get some kind of positive news to drive the market if we break out in the next few days. If anything, if the bulls do end up getting control and pushing prices higher, I am assuming it is going to be later in the week after a little bit more consolidation here. Going out to IWM, pretty similar story, but instead of pressing into the overhead resistance of that consolidation pattern, we are actually pressing into a longer term diagonal resistance here on top of the short term diagonal resistance. They are both lining up pretty cleanly right there. So a break above and close above our diagonal here, or the horizontal at $210.70 if you want a little additional confirmation, would technically signal bulls are in control. But then we have the 200 period moving average just a stone's throw away. So I'm not super interested in trading the Russell 2000 or IWM this week, just because even if we do get resolution to the top side, there isn't much room to run until a first fairly significant resistance level comprised of this 200 period moving average and the previous resistance here on the horizontal basis. Going out to the Dow Jones. Dow Jones, we are pressing right up into that 200 period moving average, just a stone throw above that. We have a previous high from here and all the way back here in March. So for me, confirmation is above that pivot, and I would be waiting if I was a bull to buy until after we cross above that line. If we don't cross that line this week, the other base case for me would be basically just staying between these two lines right here, going from about $410 and then up to 430. Anything in between those two lines, I'm not going to overly concern myself with, but I will be interested in shorting if we get down below that 410 level, and I will be interested probably in being a buyer if we go above that 430 level. Going out to IBIT, this is the first actual pullback that Bitcoin has given us in months, and we are finally testing it down into that 20 period SMA. Our RSI has reset some on the daily chart, and our MACD has crossed over, signaling a lack of bullish momentum. Honestly, I think this needs a couple of days here to chill out and hold this support zone on that 20 period SMA. If that support zone breaks, I would not be shocked for it to come down to about 57.5. And if that breaks, going out to the weekly chart, let's see, 57.5 actually would be right in line with our 9 period moving average on the weekly. So if that does break, coming down to around $54 would make some sense. But I am leaning more towards neutrality here after a couple of days of pulling back into our support zone. I'm expecting some consolidation and then another move higher over the coming week. Going out to Ethereum. Ethereum, we're high basing on the daily chart. If we take this and put it out on a weekly chart, we have 3 weeks of just pushing right into the same price level and really not going anywhere. I do see support here at around $17.80 and then just waiting for a breakout over the high of $20.75 to the top side. Going out to XLB, dropping back to daily chart. Nice high base here. Not interested in playing the breakout of 87.50 here though, because we do have the 200 period moving average directly above us. I think there are going to be better areas in the market to play this week, so I'm not interested in XLB. Going out to XLY is a different story, however. XLY, if we break out above this high base, we have open air and no more moving averages above us on the daily chart. If we check that on a weekly chart, we're above all of our moving averages as well. So I actually like the look of XLY much better than XLB, even though they have similar patterns, just because of the moving average structure on them. So I am interested in XLY so far this week. Going out to XLK. XLK, we are still overextended on the RSI. Our MACD has switched in to give us a bearish warning. If we toss this out to a weekly chart, we are consolidating within a range on the weekly chart, but I think the big tech names still need a little bit of time off to allow the momentum and stuff to kind of reset within the price charts. So I'm not super interested in XLK this week. Going out to XLE. XLE, it's hard for me to have a strong opinion on right now just because there's a lot going on in the White House potentially about opening up new energy supplies for the United States domestically. And if we start flooding the market with extra supply that was not there initially, that would drive prices down. But I do kind of like the support hold on the weekly chart. The only thing I don't like about this is these wicks testing down almost every week. We've tested below that 200 period moving average. So that tells me there are people willing to sell down below that. It makes me question whether or not that will hold. If we get news saying that more supply is coming into the market domestically in the US, this might be a shorting opportunity. Going out to XLU. XLU, I think we need to back out to a weekly chart and take a look. And basically, we are at all-time highs here. 83.41 is the all-time high, and we are pressing right up into that. I'm not super interested in buying this after basically 2 months of vertical price action on it without a pullback. So I am not really interested in XLU until we get a little bit more of a reset. Going out to XLP. XLP looks like we need to check out the weekly chart as well to me. And again, kind of similar story. We have resistance right overhead. We are trying to break out of the last couple of months consolidation, but I'm not sold on this one yet. So I am probably staying away from XLP. Going out to XLC. Dropping this one to a weekly just to see. XLC I actually like. We have open air to the top side, back up to all-time high around 105 and 60 cents on the weekly time frame. If we drop this to a daily time frame, we are still overextended on the RSI, but it's been cooling off a little bit. I do think a break to the top side around $102.80 is probably a little bit more likely than a breakdown below $99, but anything in between those two levels, I'm uninterested, and I will just be waiting to see which direction the market breaks on that before I really firm up my stance and actually take any trades on it. Going out to XLI. XLI on the weekly chart is at all-time high, has consolidated right up against it super tightly for the last few weeks. I am actually thinking that this one looks to me like it might want to break out, but we have a very similar situation here. Anything between 139 and upwards of 144 and 50 cents, I'm not going to be too concerned over. But if we do break out above that $144.50 zone for the all-time high, I would expect more price appreciation and probably significant price appreciation. Going out to XLF. XLF forming up, holding its 20 period moving average, regained its 9 period moving average over the last few days. Its RSI has reset, its MACD is in bullish territory. And if we toss this out to a weekly chart, we have a $52.64 all-time high. So little stone throw up, about $1.60 from current price to get to that. But to me, it's too close to that resistance zone to really get a good risk to reward. So I'm uninterested in this for the time being. I might be willing to go in and look at individual stocks within the sector, but for now, XLF is going to be off my radar. I still like XLY, Bitcoin, Ethereum more than XLF and the rest of these indexes that we've looked at so far. Going out to XLV, healthcare stocks, and going out to the weekly chart, we've actually broken down below the 20 period moving average, which is bearish. All of our moving averages are now starting to curl over and move down. So I am uninterested in that, except potentially for shorting opportunities later in the week or next week. Going out to gold. Gold just kind of stuck in this choppy nonsense here. I don't have a strong opinion of it one way or the other. I think honestly, neutrality is the most likely scenario. I don't see a huge rally higher, at least this week. Might get one in the next coming weeks as this consolidation continues and starts losing steam. But for now, we are in a tightly wound spring here, and I'm just uninterested in playing a breakout or breakdown on gold for the time being. Going out to silver. Silver just choppy kind of mess. There isn't really any rhyme or reason to this right now, so it's kind of hard to get a read on it on the daily chart. Putting it out to a weekly chart doesn't actually clean it up that much. We do have a couple of decreasing highs here, and we also have an increasing low with a little bit of a base here forming, a little bit of consolidation over the last 2 months. But I am fairly uninterested in this. I think there are better areas of the market to play in this week. But overall, looking at all these charts, this week might actually be one just to kind of sit on your heels or sit on your hands and just kind of wait it out and let the market fight its battles between bulls and bears and show us what direction we want to go. Last but not least, for our charts, looking at the US dollar, dollar's just basically been holding down here at the lows for the last 6 months. Not expecting that to change. I really honestly don't think we are going to get too much more pressure to the downside. I see this as more neutral than anything else at this point. Finally, let's go out to FinViz, look at the heat map. This is a 1 week performance of last week's trading and the percent wins and losses of various companies in the S&P 500. And you can see a lot of money came back into the market here with just a few underperformers, mostly in the consumer electronics area of the market, but incoming money to the market in most other sectors. Going out to our Forex Factory calendar, looking at the week ahead. Busy, busy week this week. Monday, Tuesday, Wednesday, Thursday, Friday. We have at least one on every single day with heavy hitting on Monday, Wednesday, and Friday. So keep an eye on those. Luckily, almost all of these are pre-market hours, except for a couple of them about 30 minutes into the trading day on Monday and Tuesday, it looks like. So keep an eye on those 2 days and maybe just wait an hour after opening bell before you start to trade, or just make sure you have your stop losses pulled tight. So with that, guys, as always, let me know if you have any questions. Hit me up in the comments, and I will see you next week.